Hello traders out there in Traderland. My name's Des Woodruff. I'm an analyst and also mentor here at Grok Trade. And the markets are mixed on Friday. And we got a lot to get through, so pay attention and please share this with a friend. We're looking here at the broad markets. We're looking at the S&P to start off with. Now, I always like to go macro first. Macro says we're in this huge triangle, but we busted out of it. And let's zoom in so we can see it. See, there's the line. We bust out of it and we head up. But now we have this formation called a rising wedge. Now, if you don't know what a rising wedge is and you need to learn your different chart patterns, please go to freeonlinetradingeducation.com and click on Chart School. And you will be glad you did so. But a rising wedge is more bearish than it is bullish, especially if you have a bearish divergence on the MACD. And sure enough, we have both. All right. So that tells me already, bears, be ready. Your time might be coming. But the bulls are confident here, and I happen to be a bull now, and I've been a bull here. So when you don't break out of a major trend line like that and try to be a bear. Listen, there's a lot of you trying to pick a top. Don't do that. Let me slap your virtual hands and say, shame on you. Do not try to pick tops. Only go short when you see a correction actually taking place on significant volume, right? All right, so we have this rising wedge. So we busted out of a symmetrical triangle and to the north, right? But there's no great follow through this, and we're pretty extended on this big run that we've had, and we have a bearish divergence on the MACD. If you really blow this MACD up, you have negative ticks on the histogram. All right, now we like on the weekend edition to look at bigger time frames. So here we're looking at the weekly. All right, so the weekly, we had this big symmetrical triangle. Boom, we pop up through it, looking nice. We are starting to run into some moving averages, and these moving averages are not to be ignored. Just if I go back in time, they act as resistance, they act as support, they act as support. I mean, you see this support, resistance. You can see that now they all come together here. Look at that major resistance, and look at that. We're getting ready to come up to that area right now. If I pull up the monthly big symmetrical triangle, very nice. We busted out some nice areas, but we have swing high, which is a nice resistance area. As you can see, that puts us right here at 1188. 1188 is a crucial area. Now we can go higher. You can see shadows that went higher, but that's going to be a crucial area to be watching on the monthly. So make note of that. And now let's go to the Dow. And this is the Dow Daily. We busted out of this big, let's go macro. We have this big symmetrical triangle. We busted out of it, so we need to be long. So we're long. But look at that, it's petering out. We go into a rising wedge with a bearish divergence, no good. Let me get rid of that line, draw another one here. You can see the bearish divergence right there. So this is saying, same thing the S&P is saying. Yeah, everything was going great until the big bearish divergence shows up with a rising wedge. No good. All right, let's go here to the weekly. And the weekly is really interesting. We had this trend line coming down. We're up over that, but we are right now caught up in these moving averages. Should we ignore the moving averages? The answer is no. We should not ignore those moving averages. Hang up there, we pop over them, then support on the moving averages. We come over here, we drop below them, get caught up in them, and then we sink. Come over here, they act as resistance. Now look where we're at again. So we do have some resistance points coming up here. 11,201, 11,201, 11,111. Are just really big resistance areas that we need to be paying attention to. All right, so let's go to the monthly. the monthly here, we had this symmetrical triangle. I made the line gray because we popped through there, popped through a lot of resistance, and now we're finding resistance at 11,014, 11,150 coming across. Those are resistance points, but especially that swing right there. Look at this. We popped up over that so far for the month, so let's be kind of bullish if we can continue that momentum. All right. We're going to go now to the Nasdaq and Russell's. Now listen, we've on the Nasdaq has made a 5-month high here. This is the Nasdaq. This is a really nice chart. I mean, it's doing fantastic. In large part, it had to do with Google blowing out earnings, and then Apple doing exceptionally well. And I have Apple on our V newsletter. And speaking of the V newsletter, let me show you something here. If you go here to the website, all you do is scroll down here to the bottom, click on V newsletter, and I have a video right here that is brand new that I just put up. Watch that video. It'll tell you about our stock picks. So, but check this out. The stock picks this week, we got some great bullish and bearish ones to be watching for. This is the Nasdaq Daily. Check this out. We go macro. Here's macro. Big triangle, right? We go back in time. We smack our head back here, and in 2007, 2010, we smack our head, and then we're 2010, at the end of 2010, guess where we're at? Right there. Let's blow this up so we can see it. Look at this huge smack in our head right now at resistance. This is called a big hanging man reversal pattern. Again, if you don't know about reversal patterns, go to the website, click on Chart School, and knock yourself out. It is a wonderful resource for developing traders. We're at resistance. What should happen? Go down. That's what it looks like right here to me. So let's go here to the weekly. The weekly, big symmetrical triangle. Everything looks hunky-dory. But the problem is we're at resistance. Look at this. We go back in time, resistance, resistance, resistance. Look where we're at, resistance. After a major run, 1, 2, 3, 4, 5, 6, 7 bars up on a weekly. Can we bust through? Could, but we have a trend line that we're going to deal with. I could see us popping up here, hitting our a shadow, and then coming right back down. Major resistance at 25.34 that we need to contend with. Now let's go to the monthly. And the monthly, right here, big triangle, and we're busting up out of it on the monthly. Monthly looks bullish, gang. Like this a lot on the bull side. But we're happening to be at a resistance. See that swing high right there? And see this shadow? Yeah, right there, 24.72. 24.72 on the, and that's right where we're at. We're at 24.68, but the month isn't over yet. Something to watch for, but that's where we're at. Now, last but not least, let's go over here to the Russells and go macro first. Really look at this big symmetrical triangle. Yeah, it looks great. All right, now let's zoom in here. And, oh, we are rising in a rising wedge formation, nearing major resistance points. We are already at this moment at a trend line, that comes up through here. We're at that one, but the major trend line's up here. So we have a little bit of wiggle room before we hit major resistance. Let's see what the weekly tells us. The weekly tells us, yep, that resistance knocking at the door. It's right there. I could see us popping up a little more, but after that, it's anybody's guess what's going to happen. Technicals say southbound. Here's the monthly. The monthly, gang, we are at resistance on small caps in the Russells. Look at this. Right here, we have resistance, resistance, and we're at resistance. Now I dropped a shadow line, shadow, boom. I could see us popping up over here, but then retreating and coming right back down. So overall, we're at major resistance points on the Nasdaq and the Russells. And actually, across the board, we're at these different ones. I'm going to show you something called the UUP. A lot of you know what this is. A lot of you don't. It's an exchange-traded fund, or an ETF, an exchange-traded fund, basically reflecting the dollar, being long the dollar. This thing has been chewed up, dropping. And that's why the market's been going up. So it works inversely. The thing I want to show you here is this big bullish engulfing pattern on major volume. Gang, we could be trying to put in a low right now. Look at this, we're near 22 bucks. Last time we found that low, look at that, 22 bucks. And that's right where we are starting to get to right now on increased volume. So if the markets are hitting resistance like they're wanting to drop, we're in these rising wedges, we're hitting resistance on big time frames, yeah, we might be dropping. Maybe, maybe not. But if you have the dollar showing strength at the exact same time, we have a bullish divergence too. Check this out. Look at this. Bullish divergence on this massive drop. Chances are we're putting in a bottom, gang, on the dollar. That does not bode well for the markets as a whole. Gang, if you haven't already made the decision to share this with a friend, you need to do so. Wait until I show you this next thing. We're looking at interactive brokers right now. We're looking at the VIX cash. Right now, we closed on Friday at 1988. However, the VIX futures, gang, this is where the smart money is. They are betting on the VIX in October, jumping up to almost 21. In November, the VIX jumping up to 24. In December, 25.85, 28, 29, almost 30, definitely 30, and 30 going into May, gang. Look how many months away that is. That's talking about almost, that's well over 6 months away. They're looking for volatility to increase. That means fear increasing. That means the market's dropping. So smart money says, yeah, we're banking on the markets going from $20 to $30. Gang, that is a jump here, or points. That is a jump of a 50% fear factor. Fear increasing by 50% in the market. So we have volatility. Smart money saying that, yeah, they're banking on the volatility or fear increasing. We have the dollar showing strength on major volume. There's your confirmation. And you have major resistance and rising wedges all over the place. So just know this, you heard it here. You heard it here at Grok Trade. You get the very best of trading education here. So take baby steps out there in the markets. Know this, that not having the proper education is the worst possible thing you could do as a trader. Market tuition is the most expensive expense you will ever have. Mark my words on that. If you're going to invest in anything, maybe it shouldn't be the next stock that you're gambling on. Maybe it should be an investment in trading education. Take care and safe trading, and pass this on to a friend. And give me a thumbs up down there at the bottom too, if you'd be so kind.